I think we're at a little bit of an inflection point. Those commodity price tailwinds have definitely helped a lot. I'll give you an example. So far in the Yukon, 170 million raised of equity for Yukon-related projects year to date in 2024 versus last year, I think it was about 130 all year. 43% of that money was raised in June, just in the past 20 days of that 170 million. We're seeing a lot of life in certain stocks. So I'm actually quite bullish. One thing back in September 2023 was the sentiment was poor. It was tough to raise money. And I think people were really down in the dumps in the junior mining sector overall. It's really changed. For good projects in the right locations, capital is being raised. I'll give you an example. So far in the Yukon, 170 million raised of equity for Yukon-related projects year to date in 2024 versus last year, I think it was about 130 all year. 43% of that money was raised in June, just in the past 20 days of that 170 million. So I think we're at a little bit of an inflection point. Those commodity price tailwinds have definitely helped a lot. And so I'm thinking for the right projects, high quality projects, well managed, good stewardship amongst the junior mining companies on these projects, maybe with a sponsor, a strategic investor or a key sponsor, key fund. We're seeing a lot of life in certain stocks. So I'm actually quite bullish. We're also, I think I mentioned back in September, keep in mind, it's $1 million to run a junior mining company, just to keep lights on. There's a lot of junior mining companies. So therefore you have to be, have a powerful filter and focus on best quality, best in class as far as we're concerned.
One interesting sentiment indicator for me is the activity of the banks and what the banks are doing. And what I'm seeing right now, a lot of banks are dissolving their mining teams. Yeah. Laurentian threw in the towel, for example. Stifel just closed their Calgary office like this week, earlier last week, right? So a lot of change happening on the banking side, which doesn't give me a lot of confidence, or it gives me the confidence to say this is the bottom.
It could be, yeah.
How do you feel about that? What are you seeing there?
Well, it's a good observation. It could be signs of the bottom. It's also the capital markets have really been broken for several years now, probably since 2018 or so, in the sense that the traditional financing sources, that group of funds, whether it be in Toronto or New York, haven't been there for the juniors, for the explorers. And there's been so many brokers and banks with mouths to feed that it's been very tough to do that. So the analyst coverage has gone down in terms of volume of juniors being covered. And the analysts themselves have been attracted to come to the companies and work for companies. Brock Coulter-John's a good example, good young analyst with Cormark, jumped to Onyx to lead that as CEO and take that on, that Canadian Gold Explorer. And we've seen that in a number of cases, individuals being attracted to corporate development roles, and it's kind of been a brain drain from at least the Canadian analyst pool.
Not just the analysts, like your big salespeople like big names are changing jobs right now as well. Like I've heard of move here out of Toronto, or actually Canaccord. One of their big sales guys is going corporate. I don't know where he's landing, but big shifts are. Yeah, Greg Huffman. I didn't want to throw the name there, but but he's moving, right? Not sure where he's going to land, but he's going corporate from what I've been hearing, right? So there's changes on that front as well.
Absolutely. So. I think there's signs of it. Maybe some smaller deals, some smart consolidation, a few tuck-ins and things like that. But we haven't seen the flurry amongst certainly the developers on the gold side. I think that will come. There's not a lot of product out there. On a global basis, there's very few single asset developers, producers and single asset developers. There's a big focus on Canada, so it'll be really, really interesting to see, once Artemis gets into production. Once Skeena gets permitted and they get, if they construct and build and they're in production. Ascot's about to, they poured gold. Now they're going to go into commercial production by about the end of the year. There's a lot of companies that are on that threshold of something potentially happening on M&A, especially in Canada.
Yeah, a lot of single asset producers, as you mentioned. Like as you said, Artemis, Ascot, Victoria, we're in their office, right?
Yes,
single asset
Victoria,
producers. So there could be some movement. But question is, a lot of activity in Canada, but it's is the interest really there? Are those projects big enough to move the needle for anybody, and who would acquire them? Like you mentioned the mid-tiers developers. Is that more of a mid-tier consolidation that a bunch of, let's say, 200,000 ounce producers get together?
Well, certainly the existing mid-tiers out there should be interested in 150 to 200,000 ounces per year. I think the seniors are very focused on scale in terms of 300,000 ounces a year or greater, and there aren't a lot in the pipeline. There's only about 3 or 4 companies in the world with that type of scale, tier 1 production right now. K92 being one, which we cover, is a proto 300,000 ounce per year producer. But there's very few of them on the menu for the seniors to look at. And there's not a lot in the pipeline. There's only about 7 in the pipeline. We'd put Snowline in the pipeline. Even though they just put out a resource, we'd say, yeah, they're definitely in that category of tier 1 proto, producer type assets. So the world's very thin when it comes to those type of assets. Yeah, I think the generalists are starting to come into the larger, caps, the Barricks and the Newmonts, and or getting exposed to the ETFs and things like that. But if they start to take positions and there's a buy-in, there's been a lot of disappointment over the years amongst the producers, how they've the generalists took positions in 2016, for instance, and when the gold price had a little bit of a run, a lot of research teams were then in the portfolio manager teams looking at it. We did extensive marketing when I was at Macquarie, and they found that when the gold price came down 10%, the equities went down 30%, and that wasn't very fun for them. So they really backed off. It's going to take quite something for them to come back in. They're going to go with the big liquid names. And I think it's going to take a lot for them to come down the food chain into the non-producers, and maybe not into the juniors at all. So I think that's might be a stretch in this broken capital markets world we have.
I was going to say, who are we competing with these days? Like back in the day, it was easy to pinpoint. Okay, Bitcoin and the shit coins really stealing our money, right?
Yeah,
stealing. But then we had the weed craze that was taking money from the juniors. But like, who are we competing with? It feels like there's no competitor left that we're competing with, unless you would really want to go S&P 500 and talk Nvidia and Microsoft and maybe Amazon, right?
I think that's part of it, because the demographics we're dealing with, like a lot of the powerful brokers in Canada at least, they're in their 70s, their mid 70s. They're starting to age out, and their clients are all about that age too. So we don't have that young generation that love junior mining stocks that have made a lot of money. They're, like my son, inclined to invest in the tech companies and the AIs, and they've done really well. So it's going to take a lot to get them back. And to your point, M&A velocity needs to increase so that all of a sudden there's wins on the board almost every month, and investors are seeing that and gravitating towards the best stories that have a chance to be taken out.